All right. Well, I hope everyone is doing well. This is your weekly energy materials update. This comes from Tracy Suchart, and I have not had coffee this morning, so we're in for a wild ride. Let's go over it. So, diesel shortages everywhere. She starts that out. Now, I will say this. There are shortages. However, some people are touting that we're going to run out of diesel by the 21st November, like right after Thanksgiving. That's not actually the case. What the real case is that our reserves are running low, right? So in other words, our savings account for diesel in the world is running a bit low, right? And so we're not going to run out of diesel the next day or something like that. We still have it, a checking account per se that we're using at a constant basis. But this should give this is a word of caution to everybody, right? So let's go forward with this. Diesel prices have increased by 33%. For November deliveries on this news. This is going to affect your groceries. It really, really is. It's going to affect everything, but especially the stuff that you're buying. Groceries will be most notable because those big trucks and tankers use diesel to get the stuff from the farm to your grocery store, or if we're buying from overseas, they use them to go across the tanker. Walmart may have some real issues with this. Their pricing might go up, or they might get some squeeze because they get a lot of products from overseas, right? This is, I think, maybe part of the big push to bring manufacturing back to the U.S. We'll see what happens and how far that gets. But yeah, when diesel goes up 50 and 20 cents the next few weeks, that's gonna hurt. All right. Just a note, reserves have not been this low since 1951. All right. Her commentary. I've been writing about this for weeks now, and even wrote a special issue on the Mississippi River problem when no one was talking about this. Now we are starting to see diesel shortages in this southeastern United States. Why does that matter? Why does she even bring that up? Well, because if the Mississippi River runs too low, you can't get certain ships and certain weighted ships through it. Again, the bigger the ship, the more you can carry, but the heavier it is, so the more water you have to displace to actually keep it afloat. In other words, the deeper it has to go in the water to displace water to keep it floating, right? So if you can't put it down the Mississippi, right, or do it by river, which is actually typically like 1/9 or 1/13 the cost on average, then you've got to do it by land. How do you do it by land? Well, unless you've got a railroad running up to your doorstep, you're gonna do it using diesel. So that's how interdependent like these things are. Typically if the river runs short, okay, we'll just use a little more diesel. And it goes up a little, maybe 5 cents or whatever, or 3 cents a gallon. It's not that bad, right? 15, 20 cents just this month. 15, 20 cents just this month with the thought that it could go up higher. Stuff's going to get expensive. Stuff is going to get expensive. Mansfield Energy, which tracks the availability of fuel on Friday, issued an alert for diesel fuel shortage in the southeastern United States, including North and South Carolina. These states are along the Colonial Pipeline. This shortage will work its way up to east coast, with the entire Northeast being the hardest hit due to lack of pipelines and constraints on the Colonial Pipeline volumes and lack of refining capacity in the region. Note the Colonial Pipeline ends in New Jersey. That leaves every state north and just west of that in a very vulnerable position. I'm glad I live in the South. Oh, well, she just kind of basically said the Northeast is going to be really vulnerable to this lack of diesel and everything. So, some things to watch. She said refiners are still the place to be. So tickers to watch that she not promotes, but that she suggests. Again, it's not financial advice at all. But she talks about Valero. Excuse me, VLO. Man, I need to get them that coffee, don't I? Valero, Marathon Petroleum Corp, and Phillips 66. VLO, MPC, and PSX, which sounds like PlayStation as opposed to Phillips 66. I digress. Also, she's adding PBF Energy, right? I was checking those, and I kid you not, I checked those earlier today. Here's one of them. Let's see here. Gosh, any of these. So here's VLO. If you would have bought this stock at like Monday, September 26th or something like that, or even just around the end of September, right? They've all gone up 30 to 40%. So VLO, same thing. MPC, 90. Now it's trading at about 120, just under it. Was 75, and now it's about 106. I mean, these are like, wow, I wish I would have listened to her in September. Not saying you should buy now. Not saying, again, not financial advice. I'm just saying, wow, something happened end of September, and it's been like a month and a half, and those things have already ripped 30% up, you know. Anyway. Okay, well, let's get to some fun stuff. All right. The U.S. Strategic Petroleum Reserve moved down for the 60th consecutive week to its lowest level since 1984. The 33% decline in reserves this year is the largest on record by a wide margin. Danger, Will Robinson, danger. This is an emergency reserve, and the Biden administration is not looking to refill it until oil gets to $70, thereby putting a floor under the price, which will likely keep the price elevated for longer. This is amazing for me and for those of us who are investing in oil and gas. Oh my, I mean, I don't, if this doesn't convince you, just tell me, just leave you alone, please. So what he's doing is this. Oil hasn't been at $70 for like the last year. It got there in 2021, but that was only for like half the year, right? So what he's doing, and this is why I love where we're at, what he's doing is that he is saying there is a floor. I'm going to keep a floor at $70. I'm not going to start refilling the petroleum reserve until oil hits $70 a barrel, right? For one, I don't think that's going to be the next few years, not with him at the helm of the administration, right? But just in case it does, right? He's going to make sure it stays at 70 and it doesn't go below, because he's going to start buying it, right? So if oil, all of a sudden we had this major recession, all right, that everybody's really freaking out about, right? I think for good reason, but we have a major recession and oil shoots down to $60, $65 a barrel. You know what's going to happen? The government's going to come and start refilling this strategic petroleum reserve, and they're going to bump it back up to $70, $75 or whatever, right? So oil now has a floor at $70 if the president keeps his word, which is another thing. But even if he doesn't, like, I don't think we're going to see $70 for a long time. I mean, this is, if you were on the fence, if you were like scratching your heads like, should I invest in oil and gas? I don't know. This should win you over. I mean, because what this just did is it took risk away. When the federal government says, hey, we will buy at a certain price, that means it's not going to go below it. Okay? The Biden administration just took risk away from the oil and gas industry. Now, you got to trust him for it, that's one thing or another. But my point is the fact that he even said this is going to make it to where this is a very, very secure investment for the next 2 to 3 years. And that is amazing in my mind. And with the returns that we're making at 30 to 45%, you'll have, I mean, I'm getting all my money back in 3 years anyway. So, yeah. And that's if oil doesn't spike up to 120 or something like that. So, oh my gosh, this is, again, this is amazing for us. If this does not convince you to invest in oil and gas, you don't have to invest with me, but invest in oil and gas in general, I don't know what to tell you, type thing. So, all right, moving on. Let's see here. She's got some charts that show, the issues with oil and gas, especially diesel, are around the world as well. Again, this will all be attached, so you can go through it on yourself. All right. Other things that are notable: natural gas. Europe faces a TCF natural gas shortfall next winter. Europe could face 30 billion cubic meter natural gas shortfall by 2023-2024 winter. That's next year. If the EU doesn't start planning ahead now, with the recent mild weather and lower gas prices, there is a danger of complacency creeping into the conversation around Europe's gas supplies. But we are by no means out of the woods yet, says the IEA executive director, Fatih Boril, I guess. A gas supply shortfall next year could mean Europe would lack half its volume, half the volume it needs to fill storage facilities up to 95%, which means inventories could only reach 65% capacity for next winter, the 2023-2024 winter season. Her commentary: Europe's got a lot of problems, and we're gonna see some of them come out this winter. Right, and I'm putting my own commentary in this. Now they did a smart thing. They front loaded their gas. That's why gas prices were so high in the last 3 months, because they front loaded it. They just bought a bunch before winter, which is smart, but they're gonna use it during winter, and they don't have the capacity to hold it for all of winter. Right there, I actually read an article the other day. There are literally liquefied natural gas (LNG) tankers sitting off the coast of Europe, just waiting for the price to go up so they can sell it for more. I'm like, oh my, people know what's happening. Oh my. So far they've had a mild weather, but colder weather forecasts this weekend for Europe and the U.S. have caused prices to spike, not only the U.S. but Europe as well. So you can see how sensitive these prices are. One of my notes here is that Europe is also having a problem with lack of storage capacity. It's one thing to have natural gas piped in consistently. It's another problem if you have to import it by ship from elsewhere. Like I said in my own commentary. The U.S. has been a large supplier since volumes were cut from Russia, and long-term contracts have been signed. That's important. For this reason, I still like U.S. natural gas companies, especially ones with production and distribution capabilities, such as Oxy, EQT, and LNG for long-term investments. UNG is one I follow as well. It's just natural gas stock for the U.S. Other problem with this supply is having to be shipped is that there are not just enough vessels, and she's going to get into that. But here's Europe's big issue. They're going to have shortages, and shortages don't get better when you do nothing about it. That's kind of what this paragraph is for and what the previous guys are talking about. She says, hey, her commentary is not just that, but the fact that, hey, when gas is being piped in, that's different from if you have to ship it overseas. It's much more complex. Hey, what if the shipment doesn't get there, is a week delayed? You can't call Amazon and be like, hey, where's my LNG and my liquefied natural gas? It's like, well, it's somewhere in between, two continents type thing. Also, hey, what if they don't have enough vessels to meet the demand, right? And if this demand is going to be capped in 2 years, we find the same place that we are in a lot of things. They're not just going to build a bunch of vessels which take 18 months or something like that to build. They take a long time to build and put together, and a lot of money. If they think demand is going to fall off in 2 years, they'll just say, okay, you're going to have to deal with it, and you're going to pay a higher price. So here's some tickers to go off of that she goes through for some LNG or liquefied natural gas shippers. She talks a little about lithium, that there is a power demand or lithium demand as EV boom comes up. Right now, as of 2021, the world was in deficit, and this is only expected to grow, right? So not financial advice, but I am not going to short lithium, not like some Chinese guys have done and got bailed out by their government. More on that later. Some tickers these are some tickers you can look at that are basically lithium miners and such like that. But the big thing in this is that liquefied natural gas, it's going to be very volatile. So you can invest in that. You can play within the stocks if you wanted to. It's just one of those things to where if you're in Europe, buckle up. It's going to be a rough winter. Unless it's a mild winter. Okay, if it's a mild one, it's still going to be not going to be fun. But if it's a harsh winter, it's going to be really, really rough. The biggest thing is this. Oil, people freak out about oil, when I talk to people about oil and investing in oil, they're like, well, it could go down. All the fear, FUD, all the fear, uncertainty, doubt comes up. And I'm looking at this and I'm saying, man, this is going to be golden for a few years. This is the time to get in. With things like the stock market's looking shaky type thing, it's red today. It's especially the tech sector. Real estate feels like it's on a knife. It feels like it's starting to fall. Some people are saying it's just correcting to pre-pandemic levels. 2019 levels, and I'm like, yeah, or is it like just correcting to like, right here, or is it about to fall down? Um, Now when I tell people that, they automatically just tone me out. But think of it like this: what if real estate falls 15% on average for the next 3 years? Right? Slowly, gradually falls 15% for the next years as the Fed raises rates and holds them high. That's 45%. That's a 45% discount. I'm gonna start buying at that rate, definitely. But what's gonna happen? I think a lot of newbie people are gonna jump in, or people that aren't prudent are gonna jump in. They're gonna get caught with their pants down. They're going to buy, and just say, "Hey, it's all about cash flow," and then all of a sudden their net worth is negative, and they can't get loans from the bank anymore because their net worth is lower, right? So we'll see what happens on that. Crypto is in the gutter. It seems like it's just gonna stay that way for now. A lot of people I'm following are saying Bitcoin, they love it, but it's gonna break down. It's right now it's hovering between 18 and 20,000. I've heard calls for even as low as 3, but people definitely say it's gonna go sub 17. And they'll probably start buying a little bit then, but then they'll start to pick up their purchases more as it reaches about 9,000, 8 or 9,000. That is what a lot of chartists and big wigs I follow are saying. So my point is this: I'll invest in whatever makes money. I don't care. I'm not really partial. I'm not all hail this asset or that one. But right now, oil and gas is good. It's great, and we've got some investment opportunities. If you're interested, contact me. But and if you're not, and if you're like, I'm never going to invest in oil, that's fine. I need people to not invest in oil, because if everybody did it, it wouldn't be as good an investment. So hey, you go do your thing. But regardless, buckle up, because it's going to be rough this next few years with gas prices. That's what I got. Hopefully your morning's good. I'm going to go grab some coffee from one of my favorite places, and I will talk to you on the other side.